All right. Back in the action once again. Another great day comes to an end. Time to get ready for tomorrow's trading session. It's Thursday evening after all. It's August the 13th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow. That's Friday, not just any Friday, a summer Friday trading session. And I got a jam-packed video in store for you guys and gals tonight. The charts are all prepped up in the background, as you can see. Got some E-minis, we got some oil, and of course we got the gold on our radar for tomorrow. Tomorrow may be a summer Friday, but we definitely have some great setups we're tracking for tomorrow's trading session. Lots of ranges still, so we're watching rotation, watching breakouts, watching fake outs, right? Paying attention to momentum. We're going to break down all the best setups for these range-bound markets as we go into that summer Friday trading session. Before we jump in, though, and get the charts ready for tomorrow, I just want to make sure to remind you guys, subscribe to this channel. I don't want you to miss all the good stuff we publish every evening on this newsletter, so make sure you subscribe. And don't forget, if you have any questions for me tonight, any questions at all, type those questions in the comment section below. I'll be sure to answer those questions once we finish up the video here tonight. And as always, I really appreciate you guys carving out an hour of your day every evening, Monday through Thursday. If you're like me and you rely on this newsletter to get your mind right and get those charts right for tomorrow's trading session, hit that thumbs up button for me. Always appreciate you guys tuning in every evening and watching the video. So thank you so much for joining me tonight. Don't forget, subscribe, drop those questions in the comment section, and thumbs up if you like the content for tonight. Speaking of tonight's video, though, let's cut to the chase. We get tomorrow, Friday, right around the corner. Time is money. Let's kick off this video tonight by checking the calendar for tomorrow, courtesy of the Econo Day calendar. Let's jump in and see what they have to say here for tomorrow. Now, of course, tomorrow's a Friday. Fridays are always going to be early in, early out, right? So early in, early out. We usually trade from 8 o'clock Eastern time until about 11:30 Eastern time, Monday through Thursday. On Friday mornings, though, you've really got to have a good reason to be trading after 11 a.m. Eastern time. Now, I won't lie, tomorrow's a summertime Friday. There's only a couple of them every year, right? The months of July, the month of August, obviously, Fridays during those two summertime trading months. So normally 11 o'clock on a Friday, but I'll tell you, tomorrow, you really want to start watching that price action after 10:30. And by 10:45, you can usually start to notice a very distinct difference in how the price action is moving. So just be careful tomorrow around that 10:45 to 11 o'clock block. And please be careful tomorrow afternoon, right? Friday afternoons are notorious for being very unpredictable. And usually the people who are trading on a Friday afternoon are folks who don't know any better, or they're trying to pick your pocket, right? So they always say nothing good happens after midnight, right? Yeah, well, not a lot of good happens in the afternoon on a Friday, right? So please trade carefully if you're trading after 11 o'clock on a Friday morning. Again, tomorrow morning, though, 10:45 will probably be about when we start seeing things slow down. Now, what's happening here for tomorrow? Well, you'll notice we got some news tomorrow, quite a bit of news you'll see. The big news tomorrow, of course, is that retail sales number. Everybody wants to see, basically it's been all the FANG stocks been making all the money the last few months, right? Everyone's waiting to see if these small caps, everyone's waiting to see if some of these smaller companies will start to see some traction in these retail sales numbers. Definitely a news report on our radar tomorrow. So 8:30 Eastern time, pretty good, right? That'll get us started off tomorrow morning bright and early. I usually get to my desk around 8 o'clock, about 7:30, 7:45, and start looking for trades after 8 o'clock Eastern time. That's a great time tomorrow to get a nice little shot of volatility into these, what might be a relatively sluggish summertime Friday trading session tomorrow. And then don't forget, too, we got the industrial production number at 9:15. I would love to say this will be a big market mover, but I don't think it will be. I think what's more potent is that consumer sentiment number at 10 a.m. In fact, if I had to guess tomorrow, I would guess the best setups are probably going to come between 8:30 and 9:30, and then from 10 o'clock till about 10:30. right? That kind of block for there, right? So 8:30 to 9:30, riding the wave of that retail sales, right? And trading the open. And then, of course, probably after that 10 o'clock, top of the hour, that 10 o'clock to 10:30, 10:45 block tomorrow morning. So those are the two big times of the day tomorrow. I would be definitely at my desk to make sure, right, that you're not missing all the good stuff. What do we have? What are the known unknowns for tomorrow? What else are we watching here for tomorrow? Well, again, we know when the news is. It definitely appears these stimulus talks have stalled at this point. From what I think we're all seeing right now, both sides are pretty much hunkered down. One side wants a gajillion dollars, right? The other side doesn't want to spend that much money. Is what it seems like is happening right now. One side wants a big payday or a big stimulus check. The other side doesn't really want, right, to go too crazy with it. Sounds they're not really doing a very good job of meeting in the middle right now. That is something that the whole world really is watching right now. Will they get that stimulus package approved here? Will we see some sort of optimism tomorrow? I think that's all we need. All we need is one side to say, you know what, we'll work with you. Let's make it heal. I think if we see even a glimmer of hope tomorrow, the market will really probably respond there. That means gold, right, goes up, right, with more stimulus. That means E-minis go up, of course, with, right, buy everything, right, environment right now. So stimulus is definitely on our radar tomorrow. Don't forget, we have still not heard more about that rescue plan for the airlines, right? When I talk about airlines, obviously oil comes to mind, crude oil futures. The E-minis come to mind, right? All the big airline stocks, right, like United, American, things like that. Those are Dow companies, right, S&P companies. So you definitely are thinking E-minis. You're definitely thinking oil here tomorrow. Again, we haven't heard much this week. We heard last Friday, I think it was, about this rescue plan. We haven't heard much out of it. We may hear something tomorrow. That's definitely something that we are watching for here tomorrow. And don't forget, too, the rollover for tomorrow, right? As of right now, it does look like we are possibly going to see rollover on the oil tomorrow, right? Nothing else, just the crude oil. And we'll talk more about that here once we get to the oil chart here today. So rollover is definitely, right, is definitely going to be a factor for tomorrow. And then one more thing I reminded you guys last night, next week I will not be publishing the newsletter next week. I will be, of course, in the trade room Monday through Friday, 8 o'clock, right? 8 o'clock, of course, we open up our trade room. I'll be with all of our clients tomorrow, every morning in the trade room next week. So be aware of that. I won't be publishing the newsletter. It is the third week of August, so I am going to be taking that time. Maybe a little bit of fun, but more importantly, though, I'm building out some really exciting stuff for our clients here at School of Trade to be released later on this year. So no newsletter next week. I hate to leave you guys hanging on that, but unfortunately, every once in a while, I got to break the cycle here a little bit, use that time to invest in more stuff for our wonderful clients here at SOT. So that's the bird's eye view of tomorrow. Retail sales, you definitely want to get there tomorrow early, right? And again, get out of there early. It's a Friday. Will we hear more about stimulus? Will we hear more about the rescue package? Will we get the rollover? And again, don't forget, this is the last newsletter here for a week, right? We'll come back here that last week of August. And please don't forget, as I mentioned before, we'll be in our trade room every morning at 8 o'clock Eastern time. I would love to trade right there with you, elbow to elbow. You can look over my shoulder, follow right along. It's the best place to master the skills you need to be successful. What I'll do is I'll put an easy link to register for the trade room in the description of this YouTube video. So grab that link in the description, get registered, and come out and join us every morning at 8 o'clock in the trade room. And don't forget, I'll put all the important links tonight from this video in the description of this YouTube video. All right, we're looking good. Let's keep this party rolling here. Calendar is all ready for tomorrow. Let's grab some charts. Now, like I mentioned in the introduction, there's a lot of ranges. That means rotation. Rotation, momentum, breakouts, fake outs, right? These are some of the topics we've been talking about. We've been talking about these pretty consistently all week, haven't we, right? We have a lot of these markets right now. A lot of our favorite markets are basically bullish, right? They're into these ranges right now. And we've had these triangles, if you recall, right? So we're seeing this rotation back and forth around these triangles, right? That's kind of, if you've been watching here all week this week, we began this week with that big strong run up. We've been going sideways a bit ever since, and now we're playing that game back and forth off the highs and lows of that triangle, right? That's kind of where we left off in last night's newsletter. So really that's going to continue here tonight. So think about those expanding triangles. Think about rotation, right? And we saw a lot of clues today about failed rotation. And boy, rotation really is an important part of a range-bound strategy. All right, so we got the gold, we got the oil, and we got the E-mini. Gold looks like a breakout. Gold looks like a breakout right now. It looks like they're trying to get that 2,000 round number. I got to be careful though, because we're running right into some major resistance here on the gold. So I got a good plan on the gold. I'm going to get to that here in a moment. Over on the oil looks great for a run right back up, right to its highs of its trading range. The problem is I don't want to trade inside the range. So I got to use a couple patterns there to avoid trading inside that range there. And then over on the S&P. S&P, of course, if we open the S&P chart here, starting off here tonight, there's that bull market we talked about, right? There's that trading range. There's those triangles, right? And of course that rotation back and forth. So here we are, we're at the low of this triangle, we're below the range, and really we're looking for rotation back up to the high of that range for tomorrow. I want to buy as close to the low as I can find. I want to stay out of the middle if at all possible. And there, there's a little bit of open spot up here. If I can get some momentum, we might be able to get this thing on the way up to that pendulum swing. So the idea here is pretty straightforward on the E-mini S&P. We are very much bullish overall. You can see that big bull run higher. I do want to be a buyer off the low of this, but there's one big elephant in the room, right? There's one big spook on this chart, right? There's an open loop, as we said in last night's newsletter, and that is that strong move down, right? What do we expect anytime we see a strong move in one direction? Anytime we see a strong move in one direction, we expect another leg in the same direction. Then we can start looking for that move back higher. Anytime I see a strong move higher, for example, I expect another leg in the same direction, right? We talked about how that opens and closes a loop, right, in last night's nightly newsletter. So I see this big move down. I want to be a buyer down here. I do. I want to buy this thing off of that low, but I have some problems, right? One is I don't want to buy inside the range because, as you can see, that's not exactly the cleanest area to be trading. I also want to make sure I'm buying off support levels because buying off support levels are one of the easiest ways to basically avoid losses. If you want an easy way to avoid a loss tomorrow, whenever you buy, make sure you're buying at support. And not just a moving average, but a trend line, all right, a reversal line, some clear, easy to see support level. I'll tell you right now, one of the fastest ways I took, one of the most effective ways in my personal career that I removed a lot of losses from my trading was always making sure if I'm buying at support. If I'm selling at resistance. What that does is that prevents you from buying high, for example, right? Prevents you from buying way up here and getting suckered into that trade that you later on come to regret. So I definitely don't want to buy here. I want to buy off support. I want to buy low, and I'm a little bit worried about that move down, right? To be honest with you, it's a pretty strong move down. And look at the strength of that move there. So we definitely know the bears have a little bit of the edge, and we're looking to rotate off of this low. So I do want to be a buyer, but I have to respect, right, those bears. So if I had it my way, where could I let the bears do their thing while I try to use a level of support? Well, I love this triangle, right? That triangle, of course, we've been talking about these triangles here all week this week, right? So I love this triangle. This triangle is definitely a great area of support. I'm also drawing in kind of a hidden channel, you'll notice, off of these lows as well. So really, if I had it my way, yeah, that area right there, that area right down in here really is the sweet spot. Now, the one thing we don't have is we don't really have any traps to use to get into this thing like we will see on the oil in a moment. So if I had it my way tomorrow, I'd love to let these bears try to finish off that job, right? They want to retest the low. I'd love to see those bears try to make that run down to retest that low, and I'd love to see them get stuck down there, try to sell short off the moving average so I can buy into those stop losses. I'm looking for a seller failure pattern down off that trend line. Now, I'm drawing it pretty big right now. It may only be like this, right? They may only go down, pull back, go down, and then snap right back up from there. So just be aware of that. It may not be this big when we see it tomorrow. You know, you can almost see a good example back here, right? Strong move down, let them try. Once they get underneath the moving average, right, what do? Wait for the little scalp short to trigger, right, and then buy right into that stop. That's pretty much what I'm looking for here tomorrow. I want to get down to a support level. I want to let those bears, let them foolishly try to sell this breakout, right, and I'll look to buy. Again, buying off support, buying below the range. Again, anticipating that sellers will be trying to get short on this because of that open loop, right? As we talked about in last night's newsletter. So, buying off support, buying below that range, a seller failure pattern. Wait for them to get below the moving average, wait for them to try to get short off the EMA, and buy right into those stop losses. Now, another thing you want to keep in mind too is, let's say we just go up and go sideways here. Right? Let's say we gravitate back inside this range. The range, of course, is the no trade zone, right? I don't want to be trading inside the range. But if we go back in and we start going sideways now, what's the plan for trading a bull market now into a range? We've talked about this quite a bit this week, haven't we? And that is to look underneath the range and use what? Same thing. Use a breakout, pullback, failure. We call these two-try failure patterns. I'm going to wait for the pullback. Again, get down to some support, right? Get down into those support areas. Then you know what's going to happen. That moving average comes over. That lower low will trick a lot of the rookies in the markets. The weak hands will get short, right, off that pullback. Again, we see a lot of these happen around the lows of these ranges. People that just aren't paying attention down there. Once they do, we can buy right into those stop losses. That's another seller failure pattern. This time, of course, you're trying to buy for the rotation. The goal is to rotate all the way back to the other side of that triangle, the other side of that trading range, and I'm doing that with a breakout pullback failure to snap back up into that trading range. Now, I mentioned earlier there's one more possible setup here, and that would be a 1, 2, 3 move here. If I can see a pretty strong move going higher, I'm looking for two types of entry patterns. One, which I hope we'll get, is going to be what we call a two-try trap. I'm going to mark up that high. I'm going to mark up that low. And then what I'm looking for is I'm looking for a trap. Now, trap will be my ideal entry here because we're getting a little bit high up around the top of that channel, right? Now, look at how this pattern sets up. It's a very powerful pattern, right? If I make that run, again, all starts off with that strong run higher. Okay, once we see the strong run higher, I'm going to mark up the channel off those two highs. I'm going to bring it down to that low. We already have that low right now. Then I look for the buy off the low of that channel. Now, the trap would be the ideal, right? The trap entry would be the ideal entry because that would allow me to avoid any concerns about buying into this trend line, right? Remember, you don't want to buy at resistance, right? Whenever you're buying, buy where? Buy at support. I'm telling you, if you just make that a policy of yours, I'm only buying at support, I'm only selling at resistance, it's going to keep you out of so many bad trades. Yeah, every once in a while you'll miss a good runner. That's okay though, right? Whatever you miss, you won't miss the losses. I'll tell you that much. That's one thing I didn't miss about having that rule of my trading career. Now, once we get the entry, where's our target? Where's our target off that move higher? The target's going to be that pendulum swing. Remember, rotation. Right? Rotation. So target going higher, 33.85, and if they really get crazy up there, that all-time high, I'll tell you, we hear something about stimulus, we hear about a rescue plan, right? If we see any whiff of good retail sales numbers tomorrow, right, 8:30, that all-time high could easily be a big target, a big bullseye for those bulls. So just to recap here, I'm looking for seller failures below the range on the pullback, right? Seller failures below the range on a move back into the range, or that 1, 2, 3 reversal into that hidden channel pullback, targeting, of course, that pendulum swing. Now, we've talked about failures. We've talked about traps. We've talked about pullbacks. Guys, we cover all of these patterns, believe it or not. You don't need to be a member to learn these patterns. I cover all these patterns in our free trading classes, believe it or not. We give them all away for free here at School of Trade. There's a little pop-up there, a little button that popped up there, you'll notice, in the upper right-hand corner. Grab that free course, right? You don't have to be a member to get all the good stuff here at School of Trade. Obviously, we'll be trading these patterns together in the trade room every morning at 8 o'clock Eastern Time. But if you're not a member yet, if you're not with me in the trade room, you got to grab the free trading course, the little pop-up link in the upper right-hand corner. Learn my favorite patterns. You'll see hundreds of examples of my favorite entry setups, right? You'll love that free trading course. Pause the video. And again, like I mentioned earlier, I'll put all of the important links you guys need in the description of this YouTube video as well. All right, we're looking good here. Let's keep going. How do we sell this market right now? Right? Yeah. How do I sell this sucker? Selling this is not going to be easy. I'm going to have to get a breakout. I'm going to have to get a 1, 2, 3 breakout. It's the only real option right now, right? And that would be a strong move down. That would be a bull, right? A pullback to the moving average and a jump off the moving average. I need to see a 1, 2, 3 breakout here. Now, guys, you'll notice they had all the momentum on their side here, and they couldn't do it earlier. Right? So remember, a big move down is not a guaranteed breakout, right? We have to get that strong move down. We have to hold the pullback off the moving average, and they got to jump, right? They've really got to show us that strength off the moving average. If they can, now I can mark up that low. I can mark up that high. And as we always say in the newsletter, right, the first test is the best test. That's called a 1, 2, 3 reversal, basically, a 1, 2, 3 breakout in this situation as well. It's also going to be a 1, 2, 3 into a hidden channel pullback. What do you think these bears are trying to go? They're trying to go back down to these big lows down here. I know that, so it's a ways down, right? It's a ways down, but that's where you're trying to go right now, believe it or not. The bears, I'll tell you right now, if the bears can take control of this, this could easily end up collapsing, find that hidden channel, get short off that hidden channel. And I'll tell you, if you got the extra contract, hold that, right? Hold those bullets. Right, hold that runner down to that low. This could easily evaporate tomorrow if we don't hear any news, or if the news comes out and it's not good news tomorrow morning at 8:30 Eastern Time. We definitely might see that reversal. Right now, though, we're looking for the buy off the low of this expanding triangle. Looking for that rotation back up to retest those highs. Don't forget, grab that free course linked up in the upper right-hand corner. I don't want you to miss all the good stuff we share in the free trading classes. All right, let's keep this party going. How about some oil? Now, like I mentioned earlier, we are looking at oil on a rollover here for tomorrow. As of right now, you can see the 920 contract here does have the lion's share of the volume right now, 282,000 contracts there. The 1020 contract, you'll notice, is not far behind, right? It's about 130,000 right underneath it. So, like I said last night, we are watching this rollover. Once that 1020 contract has more volume, right? The straight number of contracts, once that volume number at 149 is greater than, right, that number for the 0920 contract, we will make the switcheroo, right? We'll move over to the 1020 contract, right? Basically the October 2020 contract there. So keep in mind on that for tomorrow. Now, this, of course, is the 920 contract. So I do apologize because we haven't rolled over yet. I can't really prep up the next month's contract for you guys just yet. So we'll get there, though, probably next week in the trade room. So what do we know about oil right now? Lot of same stuff that we just talked about on the S&P, right? We had that big move up yesterday, of course, right, into that trading range. We've got this triangle, and we are rotating back and forth on this triangle. Boy, we talked about that big breakout higher last night. They couldn't get it done, failed back down as we go. Market's making some beautiful rotation back and forth. Again, the strategy here, right, is rotation. So right now, we've rotated back and forth here, right, top to bottom, bottom to top to bottom, and now we're trying to get that rotation back up to retest the highs, right? Now, there's one very interesting thing about this crude oil chart that we didn't see on the S&P, and that is they had that strong move down, right? The S&P has one too, but you'll notice they didn't get a follow through. Right, so we got that strong move down. That kind of, if remember from last night, we used the term "open the loop." Right, that opens the loop. They got their retest, so now we're good to go. Right, we're good to go now, going back up into that trading range. So really, at this point, it's all hands on deck. I'm looking for really any way to get in long here. Right, off of support. Right, always off of support. Never buying inside the middle of this range. So we're looking for bullish rotation back inside the range. I don't want to trade inside the range. I want to buy at support. So what are some support levels that I can rely on here for this E-mini? I can definitely rely on that trend line, right, off that triangle low. I do like, if I zoom in a bit closer here, I do like the little trap low below this 42.17. I really like that one. Right, that's a little trap, right? Little trap entry low. That is, well, first of all, that is a support level, right? Let's be honest there. This is also a support level as well, which it's right now it's a resistance level, but if we can get up and over it, we might be able to use that sucker as a support level later on in the process. So that's kind of the idea. I want to buy at support without buying inside of this trading range. Now, if I take the pendulum swing and I bring it on over, right, you'll notice here now, I can take this amount, right, of the move down. I can make this amount of the move back up, and that pretty much puts us right back up to retest those highs. So the big objective right now, first of all, get back to the other side of the range. The big objective, though, is to get back to that 42.90 area. And if we can get back to 42.90, we'll probably slide up to that 42.94. If the bears can take this thing, there's a big bullseye back at that 41.48 level, right? If the bears can take this thing here for tomorrow, which they've really got to show us some strength here if they want to take control of this market. So a couple different patterns I'm watching for right now. The one I really hope I get here would be a trap off of this low and bouncing off of that trend line. That would be the one that would really get me excited. It'll be a trap low, right? This is basically one try for the bears, two try for the bears. What I'll look for on this, guys, is we'll look for a strong green candle, right? Coming off that trend line, coming off that trap, strong green candle closing above the moving average to signal that entry going back up into that trading range. Buying off support, buying below the trading range. Target, of course, at the other side of the range. Target then right at the other side of the pendulum swing. We may also see a sharper move down, right? It may not trap, right? It may push through. You could say we haven't finished off that pendulum swing yet. I do think this is close enough, but maybe we didn't, right? Who knows? So if they do push a little bit stronger here now is when I start using this trend line, right? So if they do, right, let's say, for example, let me draw this up like this. Let's say they push strong now off of it. Now draw that trend line down, and now let's get up and over and in, right? We call these two-legged pullback patterns. This one's kind of a three-legged pullback, 1, 2, and 3. So if we do see it really shoot lower here, right, and it kind of punches lower, it's not a breakout yet because it's got to keep on going, right? If it keeps on going, that will be a breakout. At that point, though, bouncing up over and using it as a level of support. And what you might want to think about here is it may end up being, right, one of those seller failures, right, where we get that move down, we then pop right back up, right? Moving average, of course, comes over, and we're using that trend line, right? Using that trend line as a key area support. Stops, of course, are above that high. So a two-legged pullback is definitely on my radar. Again, if we see this market open here in Asia or whatever, right, and run lower, want to get up over, right, and use that trend line as we go. Keep in mind, too, this may also jump shallow pullback, higher high, and then trap low underneath it. Sometimes we don't get that full bounce over. Right, so keep that in mind as well. The ideal scenario would be if it pushes lower, we go up, over, and then in. Right, we get that pullback to that trend line. Sometimes, though, it just goes crazy. Right, sometimes it snaps back up. It doesn't pull back all the way and goes higher. If that's the case, just watch that low, right, and grab that trap, because obviously there's a lot more bulls than we thought there were, right? So keep your eyes on those. Again, a trap low, a seller failure, right? A bear trap above that trend line. Those are some setups I'm watching for as we go back up into that trading range. Speaking of that trading range, just like on the S&P, if we end up going back into that range and going sideways here for now, what do we have now? We're back in the range. We don't want to buy inside the range. What do? We buy below the range. Where? At support levels, right? At support levels. We buy at support below the range. I wait for what? I wait for a pullback, basically a bear breakout. I wait for that breakout pullback to trigger. Once it does, we know where stops are, and we're buying into the stops of those breakout sellers. Just remember, you want to make sure you're buying underneath the range on these, right? Sometimes what you'll see happen is the market will make a move lower, but it'll pop right back up again and do something like this. If that happens, keep looking for traps, right? Keep looking for traps. So if it does kind of pop back up into that range, right, and you can't get that failure without going inside the range, just wait for a trap low, right? These do happen quite a bit, right, where it'll pop back into the range. You don't want to trade inside the range. You want to trade below it. And whenever I'm worried about trading inside of it, I want to use those traps. All right, guys? Then, of course, same thing goes. Now, boy, there's a lot of open space up here. Lots of open space up here for the bulls. Can we get a 1, strong move up, 2, pull back, and 3, jump off the lows? If we can, if we just ignore that trading range, now mark up that high, mark up that low, and the first test is the best test. I do want to get that entry, though, again, before we get up to finish off these rotations, right? We're trying to rotate. We're trying to plan that rotation, right, up to the other side of that trading range. I would definitely be looking for some profit off at that high. And if I have an extra bullet left in the chamber, right, we can use the top of that, right, of that triangle, right? But again, don't be greedy. That pendulum swing target at 42.90 is a very good reward for the risk we have to take on it. Also, too, don't forget, if we sit inside the middle tomorrow, right, we're staying away from that. We don't want to trade in the middle. Now, how about a bear market? How do we sell this market right now? The only way to really sell it, right, is to get a breakout, right? We get a breakout. Got to see a strong move down, right? Got to show me you can get through this pendulum swing, right? Because for all I know, we may see it roll lower, come right back up, and go right back into that range again, right? So I want to see a strong move down. I want to see him hold that pullback. That's the key, and jump off the moving average. Again, right, we see a lot of these strong moves down, but they don't hold. Right? We see a lot of these strong moves down, but they don't hold. So don't assume a strong move outside the range is going to be a successful breakout. 1, 2, 3 breakout is what you want. Make them prove it to you. Prove it to me that you want this. Then I can mark up that low, mark up that high, and I'm selling the first test, right? Because after all, it is the best test, right? It's that first test after you get that 1, 2, 3 reversal. And I'll tell you, it really doesn't even matter, right, where it happens, right? I mean, look at this one right here, right? 1, 2, 3 reversal. This is a very difficult spot to get short, and you can still see, right, people are aggressively hitting that pattern hard, right? So 1, 2, 3 move. Again, strong move down, pull back to the moving average, find that low, find that high, get aggressive off the high of that hidden channel. Where's my target again? Yeah, target's easy, right? Down to that 41, 48 area. Now, again, remember, we may be on the 10-20 contract tomorrow, right? So keep your eyes on the volume for the oil futures here into that, again, 10-20 contract. As we open up in Asia, it does look like we're going to be on that 9-20 contract, that at least the initial numbers we're seeing here. So tomorrow might be a really low volume day where you might see about balanced volume on the 9-20 contract or the 10-20 contract. See, well, look at that. Look how fast it's picked up there, right? Just a few seconds there, I had the screen locked up. You can see it's pretty much a balanced, right, a volume count right now. So 920 is still leading the way, but I wouldn't be surprised. It's looking like tomorrow will be one of those days where oil kind of shares its volume, right, on both of those contracts. So again, don't be surprised tomorrow if we have a relatively low volume day. It is a summertime Friday after all, and of course with oil being rollover, it may be a sleepy session on the oil. So pick your spots. Last but not least tonight, we're wrapping up the week here on the gold. What do we know about gold right now? There's a lot to cover here on this gold, right? Let's go back and take a look at what's happening here. We had that bull, right? That bull run up. We had our trading range. We were rotating back and forth, right? Rotating back and forth, rotation, 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 rotation. And now, wow, look at that big rotation. All the way up, right, to retest the high, right? The S&P is drooling over this move. The S&P wants to that tomorrow, right? Oil wants to that tomorrow, right? They all want to rotate off of those lows. It looks like gold has already done that, doesn't it? Right? It looks like gold's already completed its rotation. But there's one big thing that stands out right now, and that is the pendulum swing. You know, we got that pendulum swing, and we talked about this last night, right? They blew right through that pendulum swing. Right? So the pendulum swing was easily broken down. And once we start seeing markets start to break free of these rotations, that's when we start to think about, okay, this thing could be transitioning now from a range-bound market into a trending market. You'll notice I've got that new channel drawn up. Right? That seems to be working pretty well here. We've got, again, very strong rotation going higher. I think probably the biggest clue that I see on this chart, well, there's two big clues. One of the big clues is the fact that we went to that pendulum swing. Remember, it's all about rotation, right? It's a range. So we rotate down, right? We should have seen more profit taking up there, but instead, what do we see? We saw it break through the high. Okay, that confirms a break of this rotation cycle, right? This is the first time it's happened this week. That's a very bullish clue in of itself. Other thing, too, is look at how strong that move is, right? That's not a very small move whatsoever. Now, they obviously got that move down again. You can definitely see the strength of that move. But what does a strong move like that tell me? Is a big bullseye right back to retest the high, right? So buyers are looking to get up, right, to retest at the very least that 1974.8. That's the big high. Right? Remember, anytime we see a strong move in one direction, we know the odds are very good. We're going to retest up at that high. Now, with that said, I can't deny the strength of that pullback. It's a pretty strong pullback. And just as we saw on the S&P earlier, right, this is where I really would like to get these bears to try again so I can buy into their stops, right? My ideal scenario here would be, I know there's a big open loop, right, as we called it last night on the newsletter. I know there's that big open loop up there, right? The buyers want to close that loop. The buyers want to finish off that objective, right? The problem is, though, where's my support level to buy off of? Okay, I can't buy right here. If I buy right here, I'm buying the midline of the channel, right? I'm buying high. I can't buy right here. I got to find a level of support. Right? So where is a level of support that I can buy off of? Let's zoom in a little bit closer here now. And you can see as there's no trade zone, buy zone, okay. Right? I'm going to get rid of these arrows too. One leg, two leg, and again, blows right through the measured move, right? All of these clues are telling me expect another leg in the same direction. That's where I'm getting that measured move level up overhead here. So we know we have an open loop to the highs. We know those buyers are going to want to retest that high. What are some options? I love this nested failure pattern with a trap here, right? Big, strong push down. So when I see a real strong move like that, I let the bears try it once. I let them try twice. And we look for that trap below that low, right? We call these nested failure patterns. In this case, though, man, it doesn't get much better than that. That's a beautiful potential trap low. Now, just remember, what you want is you want that moving average coming over. You want that nice strong green candle closing back above. At this point now, bears have tried once. Bears have tried twice. we're running right into support. We have an open loop waiting to get filled. Yeah, that's a great looking entry setup. Now, another thing to keep in mind would be, what if we don't get that trap, right? What if we don't get the trap? What if they run down, right, a little bit deeper? You know what I mean? Just like we saw on that, on oil, I believe it was, right? Where that trend line was coming down. There's no need to worry about a trend line on this one. What I do want to worry about, though, is if it does roll lower here like that, right? If it doesn't give us a trap, at this point now, I'm looking for more nesteds, right? Looking for nesteds because I'm worried this range is going to be a magnet, right? Let's face it. We did break above that pendulum, but that V top definitely leaves a little bit to be desired, right? It leaves a little bit of a level of concern. The bears may have grabbed control of this. So again, I'll do a pretty good job at mitigating that risk by looking for a trap low. Okay, I do think that's a good setup. If we do see that deeper pullback, though, I'm going to keep looking for those nesteds, right? Those ones, those twos. Keep looking for bears, trying twice, and buy right into those stop losses. We may also see it if it was to, let's say, bounce hard off of that move, right? This would be a pattern to look for. So, think of it this way. Imagine they get a strong run down. There really isn't that nested to get long down here, and the market kind of V bottoms, right, like it loves to do right now. Okay, if it does that, look for that little trap to make sure you're buying at support. So as you can see, there's definitely some nuances on this gold, and a lot of this has to do with this very aggressive back and forth that we saw here tonight. And we'll go over all those nuances every morning in the trade room, right? This is, there's only so much I can cover here on this video the night before, right? We'll do it all together every morning at 8 o'clock in the trade room. So those are kind of the things I'm looking for right now. One, of course, would be that 2-try nested with that trap below that low. The other would be we get that follow-up leg. Then it's 1 try for the bears, 2 try for the bears. And hey, if I can get it off that, right, off the underbelly of that channel, I mean, even better, guys, right? Even better. 1, 2, now we know where their stops are, right? Now we know where their exits are. Now we know their pain points are. We can buy into those stop losses. Or that last one where it may V bottom and run and really just jump, right, back up. Great. If it jumps up like that, keep your eyes open there for a shallow pullback, a higher high, and a trap low for that move going lower. Now, if we don't get any of these and the market just spikes right back up to retest the high, very difficult to want to buy up here. The easiest way to get long on this would be if the market was to jump up and start going sideways up here. Right, kind of completing off that pendulum swing, completing the measured move. If we do see it go sideways, I'll look for that, again, as always, buy underneath the range, right? Try to use a seller failure pattern. Again, these are basically just breakout pullback failures, and keep buying into those stop losses underneath that trading range. All right, guys, some pretties, again, a little bit more complexity here on this one, just because we do have to take into account that very strong bear move down and that trading range, right? That trading range is definitely going to act as a magnet if these buyers don't keep control of this market. Which reminds me, how do we get short on this thing? Well, if the market was to sink back into that range and start going sideways now this becomes a very bear market, right? And now what I'll try to do is I'll try to use the underbelly of that channel in combination with a buyer failure pattern, right? We'll try to use resistance levels above the range. So if we sink back down into that range is a magnet. What I'll keep doing is look to sell above the range, right? To range bound market, buy low, sell high, right? So if we do sink back down into that trading range, wait for that breakout, wait for those buyers to come in. And again, this all makes the assumption that we've gone back to sleep a little bit, right, inside that range, right? It'll look a lot like this, right? It'll go right back into the range. It'll start chopping around sideways. In this case, we'd be coming down off the high, go up, buyers try once, buyers try twice, right, and back down again. So think about that pattern right over there. And then, of course, right, if this thing really takes a nosedive, right, and really makes a run going lower, mark up that low, mark up that high. If there's enough strength on this reversal, right, this is why the 1, 2, the reversal is so important, right? If there's enough strength, if we blow right through that range low, you better believe there'll be a lot of people looking to get short off the top of that channel. Where are our targets at that point? Targets are definitely back down to retest today's low, 1920. Big round number, 1900 for the runner. I would love to say we'd get that big triangle, but that does seem to be a little bit too much to expect for tomorrow. Maybe we do, right? Maybe we end up at 1885 tomorrow. Maybe. What's more likely, though, is that 1, 2, 3 breakdown. Mark that low, mark that high, get short off the high, right? Target at the low of day, target at the round number, and we'll do it all over again. All right, guys? Man, oh man, we had a great day today in the trade room. It's been a great week, right, with all of our clients, 8 o'clock Eastern time. I hope I'll see you with us, right, every morning, 8 a.m., trading this stuff with me. Don't forget, tomorrow morning, should I say next week, no newsletter next week. We will be with all the members though in the trade room, 8 o'clock, like clockwork. I'll put all of the membership links you guys need to get registered for our trading sessions, to get registered for the free trading classes. I'll put all those links for you guys in the description of this YouTube video. Please don't be afraid to call the office if you have any questions. Again, even though I won't be publishing the newsletter next week, I will still be here working on new stuff for all of our clients. So don't be afraid to call the office, right, and pick my brain or ask the tough questions. I'm always here to help things out, right, to save you some time and money so you're not wasting time at the beginning of your trading career. And don't forget to grab that live support tool on the right-hand side. I'm always here to help, guys. So call, email, live support chat, whatever you do, though, don't miss our next trading session, 8 o'clock Eastern time, Monday through Friday. I hope I'll see you guys there as a brand new member. Keep in touch. Don't be a stranger. Have a great week next week if I don't see you guys in the trade room every morning. And as always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.